Hello everybody, I'm Toni Turner and welcome to the market now as of about 10:30 a.m. Eastern on Friday, July 15th. First, please know that our thoughts and prayers are with all of those who were affected last night by the terrible attack in Nice, France. God bless. The Dow and the S&P 500 inched up to new highs yet again this morning, after better than expected U.S. monthly retail sales data offset disappointing results from the big banks. Retail sales rose more than expected in June as Americans bought motor vehicles and a variety of other goods, reinforcing views that economic growth has picked up in the second quarter. However, tepid results from Citi and Wells Fargo failed to match up to the expectations set by J.P. Morgan's strong numbers yesterday or Thursday. Now let's look at three charts that could give us some insight into the week to come. First of all, as we do many times, we're going to look at our daily chart of the S&P 500 Spider, symbol SPY. As you all know, this is the ETF that closely follows our S&P 500 benchmark index. Well, it just looks like it can't be stopped here, although of course everything can. The SPY has made new highs for the last 5 days in a row, including this morning. Today's all-time high was $217.01 so far. The June high back here was $212.52. So that's what we're looking at right now. We're moving into kind of a stretch here. Of course, the SPY is trading high above and at quite a premium to its 20-day moving average, the red line, its 50-day moving average, the green line, and the 200-day moving average, which is the black line. As we look down here at our 14-day RSI in the center scale, we can see that the SPY is nearing the 70 mark. Of course, the 70 mark on the RSI indicates that whatever asset you're looking at is overbought. The MACD looks healthy here. It is above the zero line and moving up nicely. Both the MACD line, the black line, and the red line, the MACD signal line. So, one more thing we can look at here. Many times legs of moves up or down will repeat themselves. And if we measured, which I did this morning, if you measure the move up from the Brexit low back here on the SPY of $198.65, if you measure this move and then pick that line up and put it on top of this next move up that we've seen up until today, you'll see they're both about equal length, equidistance. And many times when price does that, it will go the same length twice and then it will pull back or reverse. In this case, potentially move to the downside. Again, price is very overstretched here on the SPY and on actually almost every index I looked at. So we'll have to see here if some profit taking comes in the next week and as we move further into earnings season. So is today a little topping bar? Could we pull back here to 212.50? That would be our next line of support. We have more support here. Of course, all the way down this last move up, we have support at 211, 210, and more support all the way down to, of course, these lows down at 198 and change. So now we watch and wait to see if this uptrend can continue. If the SPY pulls back and doesn't pull back any lower than about 207, certainly not lower than 204, and then if it can manage to move higher again and move into the definition of an uptrend, which is higher highs and higher lows, then we may have a whole new bull market in front of us, and that would be very nice for the summer months. If that does not take place, then we'll want to watch carefully and see what support lines the SPY can find to bounce off of. Our next chart today is the iShares Russell 2000 ETF, symbol IWM. This is kind of our go-to. We watch the IWM because the Russell 2000 is the small cap index, and many times it will act as a leading indicator for the broader market. Now you can see that the IWM has also run up, made basically the same move the SPY did, down on Brexit Day, back up, then a pullback, and back up even higher in the last week. Right now, when I captured this chart, it's trading at $119.69. It is not as overbought on the RSI as the S&P 500 is, but it is stretched, and it is up at resistance. We can see from a prior high at the level of 120. Excuse me. Back from November in 2015, back here. So now we have to see if the IWM is strong enough to move over that November high at 120 and keep going, or if it needs to pull back more into the 116 area or potentially lower to 114 before it can get the momentum to move higher. Of course, nothing's to say it would stop there and bounce, but it's one logical place. Down and up, or down even further and up. That would be the good news. If we can move in a range even this summer between 114 and 120 on the IWM, that's acceptable, as well, of course, as a move to the upside past 120 and starting a new uptrend. The all-time high, in case you're interested, on the IWM is $129.10 back from June in 2015. Okay, our final chart today, we're going to go a place we've never gone before, I don't believe anyway. We're looking at the Global Global Fertilizer ETF, symbol SOIL. I'm going to tell you right now that I went through dozens of sectors and industry groups this morning, as I have been doing all week, and everything I look at is overbought or unattractive. I've been watching, though, the agricultural commodities in the last few months, and they look like they're starting to repair themselves. And I'm wondering if global fertilizer or the fertilizer sector might benefit from that. This is the global, as I just said, the Global X Fertilizer ETF, symbol SOIL. Sectors in this that are represented, and this is a global, as I mentioned, cyclical, basic material, consumer cyclicals, and some of the top components are Syngenta, Scott's Miracle-Gro, New Farm, and Agrium. I'm sure you're familiar with a couple of these names. Now, it made a February low back here of $7.50. It made a recent low of about $8. This is not a tradable for intraday moves. It has very low volume on it. However, in the last 4 days, it looks like it's finally getting some notice. If you look at a weekly chart, you will see where there's a potential double bottom going on here. It won't be satisfied until it comes up and reaches this zone and moves above about $9.25 and up above the 200-day moving average. Still in all, in the next week, I'm not going to rush, but I'm going to watch SOIL. It would be something I would hold for the longer term. If it can stay above the $8 mark, better yet, if it can stay above $8.50. Right now it's trading at $8.74. If it can move back and forth in this 8 to 8.75 range and then start higher, I would be willing to add a small, very small position to my portfolio. Ideally, we want it over 9, which is where the 200-day moving average comes in, as it might find some resistance there and need a little extra buying to push it above that line. So this would be a careful, small move if indeed I choose to get into it, but it's something I'd like to watch as again, an industry group that isn't overbought and that may have an upcoming future that may grow. So keep an eye on SOIL. Now we're going to go on to next week's economic reports. But first, please join us this coming Monday online from 4:30 to 6 p.m. Eastern for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. If you can't attend our live session, that's not a problem. The recording of our session is available to all of our members a few minutes after the session ends. And now for the coming week's economic reports. This is one of those weeks that is quiet economic report-wise, which is probably a good thing because we are now smack dab into second quarter earnings season, and all of those reports will be coming out. So on top of earnings reports, on Tuesday we have housing starts and building permits. On Wednesday we have our usual crude inventories. Thursday we have our usual jobless claims. We also have the Philadelphia Fed and existing home sales. Please join us for Toni's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.